Thank you, Mr. Chairman. It's good to see you all out there. A lot of you look better than what I feel this morning after 4 days and the conference dinner, although some of you don't look better than what I feel, I'd have to say. So I need to acknowledge my co-authors. Rob Banks' name pops up again, and it was his idea that we do this paper in the first place. I've also had a lot of input from Dorian Garrick, but I would have to take responsibility for whatever inaccuracies are in the presentation, and I'm not sure that Rob and Dorian agree with everything that we say, but it's good to have some discussion and debates about these things. So there seems to be a little bit of a technical hitch here. I'm not quite sure how this slide got into my presentation, although now that I see it, I did hear a rumour that ICBF were investigating options for a new corporate look, and I think Brian carries this particularly well. Also, it explained something else to me. I overheard Andrew Cromie last night talking to one of the Irish dancers. She was a very buxom young lady, and he was suggesting that he try on her Irish dancing outfit. And now I understand what that was all about, because of course Andrew would prefer a more Irish theme to the corporate look. So maybe there's a few residual images in your mind, and this is a reasonably blank slide which will help clear your thoughts. Simple question: how much should we be investing in cattle breeding structures? So this is a flying saucer ride. Usually people talk about going up in helicopters, but that sort of strikes me as being like a sort of a 911 reality TV and the Big Brother watching you. And this isn't about that. It's about three little green men from little islands in the bottom of the South Pacific that are very curious about the world and quite trying to understand how it is and why it is that way. So we've looked at 7 countries, and this is a beef-focused paper. We've had a mixture of beef and dairy. I think there is the general theme applies to dairy, but the data here relates to beef. So in this picture, we've got the 7 countries, and I've listed the beef industry value in billions of euros and the beef cows in millions. And just as you look around the 2 numbers on either side of the bracket, you see the value to cow ratio differs a bit as you go around the world. And we also have very different production systems as we go around the world. So in the US, we've got extensive cow-calf and then a lot of intensive finishing. And in Europe, we've got reasonably well-fed suckler cows and reasonably intensively finished young animals. In Brazil, we've got abundant feed in half the year in the wet season and then a shortage in the rest of the year. In Australia, they feed their cows dust, I think. And in New Zealand, we feed them fresh air in the winter, but we do have some feed for them in the summer. So if we look around these countries, we looked at a lot at genetic trends. I'm just going to summarise what we found, or the sort of take-home messages. So if you look at the genetic trends of beef breeds in the USA, you see substantial increases in growth rate that really outperform most of the other countries. And they've done this with minimal deterioration in birth weight and calving ease. If you look at France, the UK and Ireland, there's much more of a focus on conformation, reflecting the local markets here. But particularly in the UK and Ireland, I think these improvements in conformation have come at the expense of calving and maternal traits. If you look in the extensively run environments, the rates of genetic progress are much lower. The breeds that have a Bos indicus component, there is much lower rates of genetic progress. In terms of explanations for this, one could be that the actual value of genetic progress is much lower in these environments. You might have a fast growth potential, but the animals just can't realise that because of the limitations in the diet. The other reason could be that the farmers in these environments don't actually see the benefits because they have very little contact with their animals. So it could be a couple of factors there. Brazil appears to have been a bit more focused on maternal traits, which I think is highly commendable, but again, the rates of genetic progress are fairly modest. And Australia and New Zealand are making gains in growth rate, but at the expense of birth weight and mature size. And overall, I would say that the progress being achieved is maybe a quarter or a half of what the potential should be in a good performing beef industry. Another comment in relation to the genetic trends. The UK and Ireland source their genetics from France, and I'm not convinced that they've done a really good job of that. I think where in France there's maybe a little bit more balanced genetic progress. When people from the UK and Ireland go and buy bulls, they buy big, muscly ones that not necessarily so balanced. And yeah, I'm not convinced that flow of genetic material has been as efficient as it could have been. Similarly, there's been a big contribution from the USA to Australia and New Zealand. But Australia, in contrast to the USA, there seems to a tendency for Australia and New Zealand to have increased birth weight more with less improvement in growth rate. And also New Zealand and Australia have a problem of increasing mature size as they select for growth rate. So that was genetic trends. If we look at recording rates, so some of these numbers are a bit rough, but don't let the facts get in the way of hopefully what is an interesting story. The bigger countries record more animals, smaller countries less. A standout there would be France, who lots of purebred cattle in their commercial sector and a lot of very high incidence of recording. Then we have the more extensive countries like Brazil and Australia, where we've got a lower percentage of cows recorded. So we've tried to work out what the investment is in genetics, and I want to put a boundary around what we define as the investment in genetics. So that what we've looked at here is really the investment in databases and genetic evaluation systems. It doesn't include genomics investment, and it doesn't include the money spent by breeders themselves to record the traits. So there is sort of a trend of bigger industry spending more money, but although it's not really that clear, France, big investment, New Zealand, they're particularly low investment and a particularly low percentage of industry value, and a low euros per recorded animal. Everything's been put into euros. So if you look per breeding cow, France is quite a high investment. Ireland also quite high. So there's big variation in the amount being invested depending on how you look at it, but big variation across countries. It's also interesting to look at who invests in the countries. So we've broken it down into three sources, so national tax or federal taxes, all people in the population, versus taxes taken in one way or other from farmers. So these, for example, I often call them levies. I think in the US they're called checkoffs. So, and then we've got the services the breeders pay to breed societies, and Arthur Rickards gave a sort of a summary of the size of the investment, which this talk hopefully can reinforce the size of that investment. So there's only a few countries that are drawing on significant amounts on their national taxes. A few other countries drawing on farmer levies, but the overwhelming amount comes from breeder services, a sort of a user pays philosophy in beef cattle genetic improvement. So who benefits from genetic improvement? I'm going to start by telling the people that I think that they don't benefit, and this also backs up what Peter Amer was saying a little bit. So meat process and feedlot finishes, even though traits are expressed in these sectors, if you look at long-term progressive genetic change in those traits, those sectors still don't get the benefits. And the reason is because they're so competitive. Meat processors and feedlots, they're competing at both ends. They're competing up at the retail selected, dealing with supermarkets and other distributors, which are fiercely competitive. And then at the other end, they're driven for procurement. So they're fighting to get enough stock. So any sort of prospect of profits are very limited on an industry scale. But these sectors can get benefits if they capture them exclusively. And this is why we often see meat processors, for example, prepared to invest, but they have very, very tight requirements as to control of that investment and who's going to get the benefits. And I think that is annoying, but perfectly rational. So the other people that don't get the benefits are the breeders. If you look at prices, yes, you can see increases in the prices of animals as they increase in index merit within a particular year. But if you look over time as the industry progressively gets better, you don't see the value of breeding animals getting higher over time. So those long-term benefits are not being captured by breeders. Instead, you've got this base price of a commercial animal that could have been slaughtered, which can go out to become a bull as a last resort. The breeders can capture a margin. The majority of breeders capture margin of that, of added value over keeping pedigree and making improvements. But that thin margin, I don't believe, is changing over time. So really, the breeders are just scrambling over the top of each other, competing for market share, and the breeds are competing with each other, and the breeders within breeds effectively are competing, and that's what motivates them to invest. So who does benefit then? So it depends, in my opinion, on whether you're a small country or whether you're a big country. Small and big is a little bit of a simplistic description, but I'll try and get the message across using those. So if you're a small country with substantial trade, then the actual product price in your industry is set by the global price or by the price within your trade barrier, not by the cost of production in your country. So if you lower the cost of production, the price will not drop in this situation. So that creates profit within, or more profitability, or less losses, may be a better way of describing it for many beef industries. This effectively results in higher land values because the extra profit gets reflected in how much people are prepared to pay for the farmland. So it either means, so improved genetic improvement in a small country means more profitable farms, higher land values, and usually the farmers own the land, so effectively the commercial farmers are the main beneficiaries. But if you have a large country with less trade, and maybe the US and Brazil are examples of this. They do trade maybe 20%, but they're very, very dependent on the local production. And effectively in these countries, when the cost of production drops, the price to consumers drops. So genetic improvement improves the efficiency of production, but competitive pressures again cause the price to consumers drop. So in this case, the consumers benefit. So you can argue for some benefits. These arguments are a little bit simplistic, but the general principles hold. And you can get some benefits even in this large country situation if it helps your industry compete against competing industries such as pigs and poultry. So let's summarise who benefits. So the breeders, they don't. The cow-calf can if you're a smaller country. Finishing feedlot, no. Processor, no. Consumers, yes. So the benefits are going to the commercial farmers and the consumers. These are the long-run benefits from sustained progress in the industry. So I think that shows clearly that we have an investment imbalance. We had 71% of the breeders investing in the genetic improvement. It's interesting to look at other comparable industries. If you go to pig and poultry companies, their value is actually 100%. Those pig and poultry companies invest everything, and they have very efficient rates of genetic progress. But we have, in sort of the other extreme of that is in dairy national evaluation centres, they tend to be better funded than beef systems. So that splits the other way. But I think then that there is clearly a case for the fact that there's a huge underinvestment in beef cattle genetic improvement by commercial farmers and consumers. And the rationale for this is that whenever we do a study of the benefits of genetic improvement, we get very, very high values. But then we look at genetic trends and see, so we do those studies even based on existing genetic trends, and then we look at the genetic trends and we see that those genetic trends are way below the potential of what they should be. So if we could get the investment right, then there is a huge, huge opportunity there. So the implications of this, I think we need to build a stronger commercial case for investment in cattle genetic improvement. There's talk of declining funding, but we have to fight this. Collectively, we have to fight it. We have to put up stronger cases. And I think we need to better understand who gets the benefits and to better communicate that understanding. It's very, very important. So often you hear that why are you spending money on breeders? This is from the industries. Why are you spending money on breeders? Why are they getting all the benefits? Why aren't commercial farmers getting the benefits? The commercial farmers don't understand that value transfer. I'd also argue that the over-reliance on breeder investment has been suboptimal in the world of beef breeding. And I think we're facing this grave risk of deterioration in key traits. Cow sizes are getting big for cows run in very extensive environments. We've got poorer fertility and calving difficulty issues. We just got to get the balance better, and just relying on breeder investment I don't think is the answer. I could also argue, this is probably an argument for another day, but I thought I'd throw it in there, is that the government and private investment in genomics, the politicians take the sexy investment because it looks good. But in a way, we've got to be careful that that doesn't get out of balance with breeder and farmer investment and trait recording for beef and dairy. Genomics has been fantastic for me and my business, but we've got to have the balance right, or we're not going to get the full benefits from it. So there's a strong case for national and international cattle breeding structures. I hope I've been able to communicate that to you. But we've got to be efficient. And part of that is doing new things, taking risks. And part of it is managing the whole political dynamic that goes on with where we have, in some situations, breed societies and AI companies that feel threatened by change and resist it. So that's just something we've got to be aware of. As scientists, as animal breeding scientists, we need to understand the commercial drivers better. We can't just be good at mathematics and genomics. We've got to understand our industries and what's going on inside them and why they're the way they are. Not just get frustrated with them, but to understand them and do something about it. And I really see ICBF as an excellent example of a modern cattle breeding structure, and I hope you all go home as inspired as what I have been this week, looking at how the various sectors, ICBF, but jointly with the National Research Organisation, with the breeders, with the AI companies, with the processors, together they've got round the table and really made a commitment to work together, and I think that's fantastic and inspiring, and a message that we should all take home to our own countries. Thank you.
Thank you very much.